Should you buy a house right now or should you wait for a market drop to make the most out of your next real estate investment? Coming up right now. What is up everyone, it's Alex here. Today we're gonna talk all things real estate investing, especially if you should buy a house right now or wait for a better opportunity down the road. Here's the format of the video. First, we're gonna take a peek overview at the economy and low interest rates and how they affect the prices. Then we're going to talk about how to protect yourself when buying to make sure that you make money going into the deal. And lastly, we're going to talk about if you should buy right now or if you should wait. Let's start with part one, the current state of the economy and low interest rates. And we'll begin with the economy. The crisis forced the economy to unexpectedly take a turn for the worst. Fortunately, many countries were able to pass some form of stimulus and mortgage forbearance in order to help those that have mortgages on their house at least until the end of the year or at least for a few couple of months. But because of this, there's also a risk, despite the unclear stimulus progress that is currently going on, especially in the United States, but also in other countries, when the forms of stimulus are going to end and when the eviction moratoriums are going to end and the mortgage forbearance is going to end, if things are not addressed properly, many people might not be able to catch up with their payments and with their obligations related to the mortgages that they have on the house, and many properties might be foreclosed and hit the market at a very attractive price, and therefore driving the prices for houses down. But to see something like this happen, we might need to wait until the end of 2021, beginning to mid of 2022, and if certain measures are extended, then maybe a little bit longer. In addition, in certain markets and in certain countries, there is a supply and inventory shortage which drives the prices for real estate up. Moving on to the low interest rates. The interest rates are at historical lows nowadays, and people with good credit are able to get a 30-year fixed rate mortgage at 2.8 to 3% interest rate, which is basically free money in the long run. With interest rates so low, everyone can afford to smash the like button for the YouTube algorithm. The good part about interest rates is that central banks are looking forward to keeping the interest rates low for at least the next 3 to 5 years. At least that's the picture that's being painted for us right now. So we have low interest rates now, and we might have low interest rates 3 to 5 years from now. The problem with interest rates being low is the fact that the asset prices are up because money is cheap to borrow and people can fit more home into their paycheck. The picture that I tried to paint with this is that asset prices are currently staying high because of low interest rates and the fact that there was additional stimulus and additional measures passed by governments around the world in order to protect those who have assets and who have mortgages and payments on their properties. Let's move on to part two to see how we can insulate ourselves to make sure that we make money going into the deal. This is a very important part of the video, and I consider it to be a very important part of any real estate investment or basically any investment that we make, because with this we make sure that we make money going into the deal and we don't lose money going into the deal. One of the rules for protecting yourself when buying a property is to not buy a move-in ready property or a fully renovated property unless you get a great deal on the price, because most of the time with those move-in ready deals or with the fully renovated houses, you pay market value or above. As investors, we always want a margin of safety on our investment, whether that's going to be a real estate property or investing in the stock market. And that's why we are looking for wedge deals, as Kevin calls them. What we are looking for is a property that needs some work to be done, that needs new paint, new carpet, new flooring, maybe some other small improvements, but that doesn't need structural work or any other kind of work that requires a huge investment from ourselves. The key when buying such properties is that you buy them in a great neighborhood where other properties are trading much higher than the price that you are paying for that property, and because you buy it and it needs some improvement, especially some cosmetic improvement, other people are running away from it and you are able to buy it below market value by 20-30% or probably more. And when you renovate the property, you are able to get it back to market value, and you pocket the difference between the price that you pay for that investment and also the improvements that you make. And the improvements that we make on the property are way below the difference between the market value and what we pay for the property, and we basically pocket the difference in equity, and we keep it as a margin of safety if the market decides to go down. The price metric is very important because that's why we choose a wedge deal and we are not paying market value for a fully renovated or a move-in ready property. Because if we do not get a great deal on the wedge, then it's not worth getting the property that's trading or is looking bad and needs improvement if we don't get an attractive price for that property. This way, when we buy a wedge property or a wedge deal, we pay less than market value, and because of this, the debt is going to be lower, the payment for that property is going to be lower, but we also make money going into the deal. And later down the road, because we made money going into the deal, we are able to refinance if we want to, and we are able to pull some money out of that property in case of any emergency or in case we find another great deal to deploy those money. So by doing something like this, you can boost your net worth instantly because you basically pocket the difference because you made the improvements yourself and you are basically taking the property to market value or above through your improvements. Well, after all this, should you buy now or should you wait? I assume that if you're looking to buy and you clicked on this video, you have a stable income, or you have a stable job that's not going to be affected by the crisis, or if there's going to be a second wave, or you have some money on the side that you can use in order to protect the investments that you made and you make sure you're not going to lose the property. Otherwise, it's no bueno. Then, if you're able to find a wedge deal in a great neighborhood where you can make sure that through your improvements you can make money going into the deal, then go ahead and buy. The key is to find a property that's trading below market value that you can improve and force appreciate, and this way you make sure that you make money going into the deal and you are protected because you now have insulation. You have a margin of safety on that property, on that investment that's going to protect you from any further downturn or whatever. If you're not able to find a property that you can buy for below market value, where you can build a margin of safety and where you can make sure that you're going to make money going into the deal, then wait. Wait for 12, 24 months or more, because there's a decent chance of a price correction where you will be able to get that margin of safety that we just talked about, while the interest rates will still be low. Always make sure that you get a margin of safety on your investments in order to protect yourself in the long run. Think about buying $10 bills for $5 to $7. Always. Alright everyone, I want to thank you so much for watching this video. I hope you enjoyed it and you found it useful. If you did so, all I ask you is to please consider giving it a like because it tremendously helps with the YouTube algorithm. Feel free to subscribe if you want to learn more about personal finance and investing, and also follow me on the path to FIRE. And until next time, take care, have a wonderful day, and don't forget that you are amazing.